Hey guys, today we're going to update how I'm managing the dollar-yen short trade from last week, and moreover how I plan to trade the NZD/USD's weekly bias, and finally cover a new weekly bias on the CAD yen. Okay, so let's start with the dollar yen. Okay, this is a weekly chart. Let me run you by the current setup I'm looking at. So the last weekly short trade, that form was right here, and the last weekly long trade, that form was right here. And this weekly bias was confirmed to be short, or in other words, price is likely to reach this pivot low before reaching this pivot high. And as you guys know, I took an aggressive short entry roughly at these levels right here last week, with the stop loss a little bit higher and its main target right here. Okay, so let me go ahead and update you on this trade. Let's go over to the 15-minute chart. Okay, so on this 15-minute chart last week, I took a short entry at this level right here with the stop loss at this pivot high and its main target way below on the weekly bias's pivot low. Now this was an aggressive short entry through this trend line breakout and break back in. Now right after the entry, we got a nice fall all the way down to these levels, just shy of the main target by about 80 pips. And then throughout the latter part of this week, we got this big pullback, and moreover this NFP release pushed price all the way up to here. Now at the current moment, there's no definitive signs of current long strength forming, so I'm still holding this short position. However, since this is an aggressive entry, I'm constantly watching the lower time frames for any current strong strength long, in which case it forms, I will abort this short trade immediately. And one area I'm keenly watching for any current long strength is these entry levels. Okay, so one thing to remember is that current long strength often forms near the entry level for the opposing trade. So since I entered this short trade at this level right here, roughly in these levels right here, if long strength is going to override this short trade, it typically forms in these areas right here. Okay, but keep in mind that's not 100% of the time, but it is something to remember. Okay, and moreover, if we do not get this current long strength, I am still willing to take another short entry, roughly at these 132.50 levels. Again, with the stop loss at this pivot high and its main target way below, at that weekly bias's pivot low. Okay, and I'll keep you guys updated with this one. Let's go on to the NZD/USD pair. Okay, and if you're having trouble understanding what I'm talking about in terms of biases and lower confirmations, please check out my analysis manual. Okay, and the link for that is in the details section of this video. Okay, this is a weekly chart. Let me run you by the current setup I was looking at. So the last weekly long trade, that form was right here, and the last weekly short trade, that form was right here. And if you recall, this bias was confirmed to be long, or in other words, price is likely to reach this pivot high before reaching this pivot low. However, if you recall my last analysis, I was mentioning that there's a possibility that this bias can be reverted back to short due to trendline breakouts in these levels right here. So let me go ahead and show you what's happening at this moment. Let's go over to the 4-hour chart. Okay, so on this 4-hour chart, that weekly bias was initially confirmed to be long. This trendline breakout and immediate break back in. However, price reaching its pivot high right here. However, right at this level and also this level right here, there was normal long strength confirmed twice. So in other words, at the current moment, if price can reach this pivot low right here, that's going to create strong short strength and confirm that weekly bias actually to be short. Okay, but for the current moment, that weekly bias is still long. Okay, and moreover, I did take an aggressive long entry at these levels right here. However, I already avoided this long entry at this pivot high right here. Okay, and I didn't post this long trade because it was in between the posting days. But let me go ahead and explain what happened. Let's go over to the 15-minute chart. Okay, so on this 15-minute chart, right at this point right here, there was an aggressive long entry setup with a stop loss at this pivot low right here. And so as price pulled back in this area, I took a long entry, roughly in these areas right here. However, I took out the entire position at the prior pivot high at this level right here. Now again, I aborted this long entry because there's the possibility that this 4-hour strong short strength can form. Okay, so let me just wrap this up for you on the 4-hour chart. Okay, so again on this 4-hour chart, that current weekly bias is still confirmed to be long at this point. However, if price reaches this pivot low right here to create strong short strength, I will be willing to take an aggressive short entry. Okay, and moreover, I will not be taking any more aggressive long entries at this point because the possibility of strong short strength forming does bug me. Okay, and I'll keep you guys updated with this one. Let's go on to the CAD yen. Okay, this is a weekly chart. Let me run you by the current setup I'm looking at. So the last weekly short trade, that form was right here, and the last weekly long trade, that form was right here. Let's go ahead and do our initial analysis to see how much short strength and long strength there is. Let's go over to the monthly chart. Okay, so on this monthly chart, that weekly short trade formed in this area right here, and there's actually no price elements providing short strength. Okay, and that weekly long trade that formed right here, it actually has 4 mini gaps providing long strength, plus a legitimate trend line also providing long strength. Okay, so let's finish up this analysis. Let's go back to the weekly chart. Okay, so back on this weekly chart, that short trade has a nice full candle, as well as the long trade has a full candle also. Now, as you can see, these full candles seem to be roughly equal in strength, right? Because the rejections are about equal. However, you want to remember that when you're measuring the strength of full candles, simply the size of the candle from open to close also provides strength for that candle. And so as you can see, the body of this candle is much bigger than this one, making this long candle stronger. Okay, so putting it all together, the initial analysis is stating that this bias is long, or in other words, price is likely to reach this pivot high before reaching this pivot low. Okay, but in order to take an entry, we always need the lower confirmations. So let me show you what's happening there. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, if price could fall down to this trend line, break it out, and immediately break back in, however, price falls down to that pivot low, that'll create strong short strength and confirm that weekly bias to be short. And although the initial analysis is stating that this bias is long, if this lower confirmation forms short, I'll be willing to take a short entry and more of an aggressive short entry in this case also, which allows me to have a much tighter stop loss. Okay, so I'll keep you guys updated with this setup also. Okay, so today let me talk a little bit about breaking trading rules. Now, it can be very hard to trade within your rules when the fear of missing out or temptation is a constant pressure that every trader has during trading. Now, I have the same issues too. Like for example, on the dollar yen short trade, last night's NFP gave a big pullback up to 10 pips to my entry point. And my rule is stating that I'll only take a second entry if I get a pullback to the original entry point. However, I started to feel the fear of missing out, and so I had to constantly subdue this urge to take a short entry before my entry levels reached. Now, I don't have a methodical way to counter this issue, but over the years I started to understand this dilemma of breaking rules much deeper. Now, what I learned is that if you break one rule, you're much more prone, or it's much easier to break another rule, and it's very hard to recuperate from that initial broken rule. And since each broken rule makes it easier to break the next one trade from start to finish can exponentially have more broken rules if you break that first rule. Okay, so it's kind of like smoking or any bad habit, right? The key to quitting smoking is to get past that initial cigarette. However, if you smoke that initial cigarette, it's much more easy to smoke the second, third, fourth, and fifth cigarette, right? So the key to not break your trading rules is to focus on getting past that initial broken rule. Now, I think there's many ways to get past this initial need, and I'm still working on this myself. But in my opinion, simply knowing the dynamics of why traders break their rules is the first step in resolving this issue. Because at the very least, it allows us to focus on the core or the root of this problem. Okay, so again, when you're trading, you want to remember that the first broken rule is the hardest to get past. And it's also the most important because once you open that Pandora's box, it's extremely hard to get it closed again. Alright, so that's it for this weekly analysis. I hope you guys have a great week, guys. Thanks for watching. Goodbye.